How to build wealth twice as fast as an entrepreneur. Are you an entrepreneur who is frustrated with paying six figures in taxes and you want an easier way to keep more money for yourself so that you can improve your net worth? Well, in this video, you'll learn exactly how to do that without headache and stress. Now, my name is Nathan Garcia, and I am the founder of The Pocket Plan, and I am a certified financial planner and investment advisor. None of the information that you're seeing here is tax or legal advice for you, but I am going to show you how you can structure your compensation in order to legally reduce your taxes. If you are paying yourself earned income, then you are doing a disservice because that is a type of income that is taxed the most. Let me give you an example. As an entrepreneur who is receiving earned income, you have to pay marginal taxes, marginal income taxes at the federal and state level. At the federal level, the highest marginal tax rate is 37%, and the state level will depend on where you live. But that's not the only tax that you pay. You'll also have your payroll taxes that will cover your Social Security and Medicare payments. Those are another 7.65%. You'll also have to pick up the self-employment taxes, which double the payroll. So you end up paying 15.3% on those taxes combined. But then you also have to cover your unemployment taxes on the federal and state level, and those are going to vary based on where you live. But in this example, we'll say that it's 9%. So collectively, you end up feeling like this little girl here because you are paying 61% of your income in taxes when you are paying yourself an earned income as an entrepreneur. And that's because you're paying all of the income taxes, the payroll taxes, the self-employment taxes, the unemployment insurance. It all adds up. But let's take a minute and think about this. If 61% of your income is going to taxes, then when do you start working for yourself each year? Well, if you're like the folks who are just paying themselves an earned income, that means that 61% of the year you're working for Uncle Sam, meaning that you don't start working for yourself until mid-July. Now, wouldn't it be great to start working for yourself before July 15th every year? Well, there's an easier way, and it's the way that many executives are paying themselves, and it's not through earned income. So let's see how we can lower our taxes legally by modeling what the Fortune 500 CEOs do. They primarily pay themselves using unearned income or capital gains. Now, this is a different type of income, but it will allow you to reduce how much taxes you pay because you're going to be taxed at a lower rate. And this only applies to income that's not acquired through work. So it's not earned income. It's primarily your interest or your dividends that are paid through your company. And this is not subject to any payroll taxes. So you automatically get a savings by not paying the payroll taxes. But the disadvantage here is that none of that income can go into an individual retirement account, which isn't a big deal for many entrepreneurs. So how does this work? Well, unearned income taxes can be taxed at a lower rate, anywhere from 0% up to 20%. And that's going to vary based on your marginal income tax bracket. And this is why you see many executives reduce the amount of salary that they receive and increase the amount of stock options that they get. And that structures the total compensation package. So let's take a look at a few entrepreneurs you may know. Warren Buffett is the one of the richest men in America with a net worth allegedly of over $100 billion. He only pays himself a salary of about $100,000, and he has the stock options and his stock ownership that comprise the majority of his net worth. But you also have other executives like Andy Jassy, the CEO of Amazon, who has a $212 million compensation package, but only receives a salary of about $175,000. And it's not just the Berkshire Hathaways and the Amazons. You can also see this with executives like Kathy Warden of Northrop Grumman, she pays herself a salary, or her board pays herself a salary of about $1.5 million, but that's just a fraction of her overall compensation. And the same goes with James Umpleby of Caterpillar. He's receiving a salary of about $1.6 million, but that's just a fraction of his overall compensation package. In fact, when we look at the compensation package here of Kathy Warden, you notice that her salary is just a small fraction of her overall compensation package. The rest of her compensation is paid through stock options, which are taxed at the unearned income rate, or they can be taxed at a lower rate, anywhere from 0 to 20%. So just by paying 20% in taxes, instead of paying 61%, you're paying 21% in taxes. That can significantly increase how much money you are retaining, and it can help you to increase your wealth a lot quicker. And what's beautiful is that as an entrepreneur, you have a lot of flexibility or influence on your overall compensation structure. So let's just do a quick recap here of the different tax options. You have earned income, where you're going to pay payroll taxes. You're going to have higher marginal rates up to 37% plus your state. And this is going to allow you to contribute to a 401k, so you can max that out and get a nice little tax deduction there if you choose. However, you may want to use unearned income like the majority of the Fortune 500 CEOs, who are reducing the amount of salary that they're taking, but increasing the amount of stock options that they receive, so that they can limit their taxable income. And you see that when you do this, you're not going to have to pay payroll taxes on that income. You are going to have a rate that's dependent on your earned income rate. And the one drawback is that you can't contribute to an IRA. But again, at that point, does it really matter? So if you have any questions, or you want to go into this a little bit further, you can reach out to me. My name is Nathan Garcia, and you can schedule a 15-minute call with me by using the link here. Thanks so much. I look forward to seeing you in the next video. Take care.